Probably the most interesting stock that I'm watching right now is Disney. I wouldn't say they had really good earnings at all yesterday. In fact, it looks like they lost subscribers, at least domestically, on their Disney Plus plan, and then they're hiking prices on the Disney Plus plan. I was looking at that. They're like raising it from $10.99 to $13.99. I think to myself, I have Disney Plus. I think I've watched Old Yeller a few times on it. I sometimes will watch some of the Marvel movies I don't see in the movie theaters. Outside of that, I don't have much of a use for it. I'm thinking to myself, I'm not paying extra $3 a year. That's like another $36 a year. I've got no use for it, so I'm going to cancel it. I don't want it, and I don't have a position in Disney. I don't care what it does, but I don't see the merit of what they're having to offer to suggest, hey, let's jack it up another 30% on people or $3 when everybody's already struggling with inflation as it is, because they're not really trying to create the most happy place in the world. They're trying to create the most expensive place in the world. Trust me. I live in Central Florida. I've been to Disney more times than I care to admit. It's not worth the price that they charge for pretty much everything. Not a great quarter. The earnings came in at like $1.03. I think that was 6% less than what they were looking at from a year-over-year basis. That's what the revenues decreased by, or the earnings decreased by. Let's go ahead and look at the charts here on Disney, because I think that's going to tell a bigger story. On Disney, you have this consolidation essentially that's been going on since the late March. And I think today's price action was pretty interesting from a swing trading standpoint. You have essentially a breakout that took place today. So you have this sort of a triple bottom. You have the first bottom, the second bottom, and the third bottom that is formed. And then you had this big surge through it. It's up 4.8% today. And this is also a good example of why sometimes earnings do not make sense in terms of how the market reaction responds to the earnings itself. Not a great earnings report. Some people will say, oh, it's great that they're raising prices, but you don't want to lose subscribers in the process either, and it seems like that's one of the things that they're doing. And then you have this other resistance level too that it broke out of coming into today as well. It actually gapped above this resistance level. So two different layers, cleared both of them. If I'm looking to swing trade Disney at this point, I would look to be trying to play a pullback to this like 90.38, 90.40 level. See if it'll bounce. Wait for it to start bouncing. Don't just say because it's testing it that's a reason to get into it. And wait for it to pull back and then bounce. Now, if it can't hold that support level and it just crushes right through it, then you want to start looking at this particular support level. That will be about 89.35. You want to see if that support level is going to be able to hold for you. If it can't, then that's not a reason to buy it really, right? I mean, it's simple as that. You want to wait for an actual bounce to materialize. You don't have to get in right at the very lows of a market bounce. In fact, I would say that's a really bad thing to try and do because it usually leads to some pretty significant losses in the long term when you're always trying to bottom tick everything. So that's Disney from the very, very short term. Now I want to expand out a little bit more and show you another point of view to be very concerned with. This is a long-term declining channel. So this is one reason why I would say, no, I don't think I want to hold Disney. I had this one actually in my long-term account. I don't make a lot of changes to my long-term accounts. But I did recently when I got out of Disney. I think it might have been like 3 or 4 months ago when it was trading still like in the lower 100s, like 102, 103. I think I got in at like 98 or so. I don't know the exact numbers, but in the end, I think I sold it for like a 2 or a 3% gain. It wasn't anything spectacular, but I also didn't think that the stock was really going anywhere, and I did not like the declining channel that had developed over essentially the last 15 months or so. But you got this massive, massive declining channel. So if it does break out, yes, there could be a significant move from a swing trading standpoint that takes you up to 107. From a long-term standpoint, I don't think that's really anything to brag about, but that could happen from a short-term standpoint. But I would be very concerned of whether or not it's going to break back to the downside when it gets tested. We saw it the last 2 times, back in February of this year, and we saw it back in August of this year. So that's very possible. We saw the same thing with Tesla, and I keep bringing up the Tesla because it just continues to work like a charm. I mean, we've seen massive rejections at this major resistance level, right? And we saw it again here in July right before it reported earnings. It got rejected. So it's worth being concerned with these major long-term resistance levels, and you got a perfectly parallel declining channel that you want to be cognizant of. Now, let's zoom it out a little bit further because I think it gets even more interesting when you look at it, Disney, from a monthly chart. And I don't get into the monthly charts all that much. But what do you guys see here? You see a major support level. So essentially, this yellow line here, when you go back to the daily and look at it, the stock has been bouncing, going back to the late last year, has been bouncing off of this critical support level that really no one's talking about. And when you look at it from a monthly view, holy cow, that could be a real big problem if that level breaks. And so You don't want to see that, because then you're talking about a potential pullback of gargantuan proportions before it can find support. Because what we saw here in 2012 all the way through July of 2015, yeah, a long time ago, some of you guys weren't even trading back then, was a monster rally, but it didn't really form any long-term support levels in between. It formed this massive support level, and if that cracks and you get a major market turndown, yes, DIS could go back down to 46. And I'm not just trying to spread fear or anything. It's good to be aware of some of these long-term support levels that could really come back to bite you. So with my analysis on Disney, what I want to highlight is the long-term problems that there is in the chart, not liking it from a long-term standpoint, but from a daily standpoint, I do think it looks a little bit more attractive when you're looking at it from a short-term swing trading approach. I don't think it's necessarily something I would day trade, but from a swing trading standpoint, it could work. Also, one more resistance level that I'd want to point out to you is this one right here. You got a little bit of resistance just overhead there. If it can break through that, it's likely to get into this gap here that was formed back in May. That's probably the last time it reported earnings, when it had to beat down then. So then it sets up for a potential run to 101. So there's maybe about 10% of possible upside if this rally can continue from what we saw today. It's good, strong volume. And then their ideal price would be for it to get back up to this declining channel, the upper channel band of that, and then go ahead and take profits. Long term, help us if we end up breaking this level, because that's not going to be a good sight for the stock. Don't forget to like and subscribe to my channel if you'd like more swing trading tips and analysis of your favorite stocks. Thank you guys, and God bless.